back for another episode of I Hate Insurance podcast. Welcome back. Say goodbye to fake coverage full of exclusions, gaps, and fine print. We're exposing the old school insurance world, showing you what a true partnership looks like. So we have lots to talk about. I think this is the second podcast of the year. They posted one already.
Under new management.
Yeah, under new management. But we're very devastated by all those who were affected by the California wildfires. Natural disasters have occurred all over the country this last year. A lot of people are learning the hard way. They didn't have the coverage they thought they had with mudslides, wind, flood, and wildfire. We'll talk about why it's important to understand the coverage you have, from co-insurance to what perils are covered. Pick a partner that provides the right rate and coverage, not the cheapest price. Stick around and learn more about homeowners coverage and how you can protect your biggest asset the right way. So today we have a few talking points, a few more than usual. What are perils, and why is it important to understand the perils that are covered and what aren't covered?
Well, I think the most important thing is what's not covered. I think you can't do half the job. And that's the problem with the old way that, it's offered. As a homeowners company, you don't cover earthquake, you don't cover flood, mudslides aren't covered.
So that's what they mean by peril, though. When they say peril, they're getting tricky in a way.
Perils, wind, collapse, falling objects, it's a list of insurance perils, but there's a policy also that doesn't have perils mentioned called a DIC policy, or difference in condition. And that, that's our approach is, if I buy insurance and it doesn't cover me and I have to cover it myself, what did I buy the insurance for? Right? So if you started your own little piggy bank, put your money in it, and a flood came, you wouldn't look at yourself and say, I'm not covering the flood. That's what the piggy bank is for. That's kind of what insurance should be for. So, Elon Musk has revolutionized the rockets going to the moon, and insurance is old cans of corn. They were designed in the 50s and 60s. The flood insurance program only offers you $250,000 on a home. That worked in the 50s and 60s, but, what does the government do right? Why would you buy flood insurance from the government? Because it's cheap, right? So, but it's not right? You can't do it that way. So, all of the catastrophes, I think, of Maui, all the storms in Florida, convective storms, tornadoes across, the middle of the country, which really people don't talk about as much. Same with North Carolina and, Asheville, where, they're living in their tents in their driveway because their homes are washed away. And, that type of storm happened before in the 1900s, early 1900s. So when you say you're not in a floodplain, you're kind of going along with the insurance guys that, you don't need it. Right? You don't need that. No. Your home is your most valuable asset. For, it doesn't matter what class you're in. The rich might have more than one, but it's still one of their most valuable assets, and it appreciates all the time. So, you should protect it. And you can't do half the job. So, I remember in Maui, that wildfire, they're on TV asking where the government is. What's the government going to do? What you need is a check. You need the homeowners company to come write you a check so you can start building your house back. But instead of, coming out and making it simple, they hire a third-party adjuster to come out to your house, and he actually re-underwrites the risk. How old was your roof? Oh, your roof was 20 years old. We don't have to pay for that. Were they insured to value? If it's $500 a square foot and you only insured it to $350, which is the biggest thing that I see as people come at us, they want to talk about what is it going to cost to rebuild it? And I had one guy tell me he can build stuff for $65 a square foot, which, if he can, when he dies, that'll go away because he's magic. I don't believe it. We insure chicken coops, and to rebuild a chicken coop brand new, it's $125 a square foot or more. So you can't build houses and living, places for $62. That's ridiculous. And it changes all the time based on lumber prices, cost of, the workers, roofing materials. So you know that. You've been doing all that stuff.
It adds up quick, people.
So do you want to tell them the story?
Yeah, my story. Yeah, when the fire's there, it's not, the price doesn't really matter. I'm sure a lot of people think that now in California, people that probably didn't buy coverage because the price has gone up. And I have a property I just bought, and it's in a wilderness area and not a lot of insurance options.
He told me it was too expensive when we quoted him.
Yeah, so I said, it's too much. So I didn't buy it. Don't have coverage. Fires right out our front door this summer. And I look at my dad.
And it was worth it.
Yeah, I'm like, think they'll let me buy it tomorrow? It's Sunday afternoon. He's like, no.
Well, they wouldn't let you buy net quote.
Yeah,
we would quote you a new quote with fire right out front your door. It's not going to be the same price. So insurance spreads it out over time. So, in North Carolina, there's like 40 some odd homes that were washed away. They've been there forever, and they've paid premium forever. And when, what can happen, you shouldn't be talking about perils. Right. And if you write their business, you should say, look, we're going to cover everything. And then you go underwrite the house. You look at it, where it's at. How well do they maintain the fire? And you underwrite it. That's what underwriting is. We're not selling insurance to the cheapest price and reducing the value of the home. You can get a cheaper price, but now you got a co-insurance penalty. And in Florida, there was actually a guy that made it to the front page of the newspaper. He said, I reduced my insurance. He reduced it from like $600,000 to $400,000 in value, which is going to save you money. But when you come to me, I'm going to say, you can't do that. That's underwriting. You have to insure it for the right amount.
As the buyer, they don't understand the way it works. And that's one of our talking points. That's why insurance agents should be fiduciaries and say, dude, I've run a cost estimator on your house in your area, and this is what it's going to be. Right? We can't do it for less than that. So if your goal is cheap insurance, you might be the problem. But that's one of our points, is what is the easiest way to explain co-insurance? That's basically what you were talking about. When you reduce the value of your home and it's really worth $800,000, you reduce it to $400,000, and people don't understand, you're going to get penalized for that because you're only insuring it to 50. You're only insuring it to 50% of the value.
Yeah, because you never paid the right premium. So you can't get 50% even. It penalizes you. You get less than 50% because you wanted a cheap price, right? So you should be looking at the claim. What isn't covered and what does it look like? And then look at the price, right? Everybody buys insurance looking at the price. I'm never going to have a claim, right? It's not going to be me. So again, insurance companies, insurance people, we need to come up with a new approach, a new strategy. And that's what we're doing. We're not going to keep doing the same thing the same way over and over again and expecting a different result. I went through this in Katrina. Again, if you underwrite it and then you send out a person to measure and adjust it, that's what the lawyers sue. We had some guys that couldn't measure. Their rolling tape didn't measure. And that became a problem for us because they're saying, oh, you're trying to cheat people. So, after Katrina, I said, do not measure anything, right? We're not going to go re-underwrite. We're going to go pay the claim.
So the co-insurance, though, what is?
It's a penalty. It's in, every policy.
So, but how does it work?
If you have a $40 million house, like our, prior insured, she insures it for 20 because that's what her banker requires, where she has all her assets, right? We only need 20 million. Well, with the co-insurance penalty, the max they could ever get was 15. So there's still 5 million under.
All right. So you have to insure it. Most policies have different wording, but it's at least 80 to 90%.
Well, if you pay for an 80% co-insurance clause, which is more money because you don't have to insure it, and you met 80%, then yeah, there's no penalty. You can buy a 90% co-insurance clause. You can buy 100%. That's all, part of the negotiation. But the bigger issue is you can't do half the job. All the perils ought to be included in one policy. We're now talking with a guy in California that wants to do a program like we've been trying to do and done a little bit of, but, most people want cheap insurance. So we haven't sold a bunch in California. We had some homes near the fire. One was threatened. I think it was a $24 million house of some famous person. But, we insure the whole thing ground up. And you insure the building for, whatever we agree based on what you think and what we think we agree. Contents, that's another, thing we agree on. Loss of use, right? Some people have another house that they could go live in Tahoe or something. And so they don't need loss of use. And then you have upgrades for code. So, there's all kinds of things you have to think about when you're involved in a claim like this. And, I don't know how many people didn't buy insurance at all, but I think there's more than you would think.
So, one of the things in one of the articles that I saw said hundreds of thousands of homeowners shifted to the California state-run Fair Plan.
Right.
And their exposures tripled since 2020 to $458 billion, and it only has $2.5 billion in reinsurance and $200 million in cash.
Yeah, so like all government plans, whether it's Citizens in Florida or Fair Plan, they don't have the money, right? They have some money, but nowhere near enough, and their idea is they'll tax everybody. Like in Florida, every insurance company, including us, pays a hurricane tax, which is on top of all the other taxes we already pay to help, fill Citizens whole and take care of the people who don't buy insurance.
And Citizens is just like the Fair Plan for California, but for Florida.
It's in Louisiana has the Citizens. So that's what states do when, affordability becomes an issue. And again, as you're buying a house, you should be able to afford proper insurance, or you really shouldn't buy the house.
Well, then the other issue is the California Fair Plan can only offer a maximum of $2 million home value, and the average home in the Palisades is $3.7 million.
Right.
Does the Fair Plan have a co-insurance clause?
It does. There's a new law. Newsom passed AB 2756, I believe, and it says if you're not insured to 80% of the value, then it becomes an actual cash value policy, which basically, it's going to pay you whatever the actual cash value is. Not going to reward you for underinsuring, so it's another penalty.
So you're not going to get $2 million.
Well, and again, if you have to, under California Fair Plan, $250,000 of your coverage has to be allocated to code upgrades. So you couldn't buy that much on your house because $250,000 is for code upgrades. So you have to reduce whatever they offer. And I don't know what the limit is. I was told it's $3 million now. So the most you could cover the building for would be $2.75 million, because the other $250,000 has to be for code upgrades because your house is old and you got to do some upgrades to it. So, the thing I would tell you that, before this whole problem started in California, which to me, fundamentally, the problem is the same everywhere. Maui, Florida, Louisiana, the solution is simple. Buyers need to think about the claim more than the premium. And, it's like, if you want a Porsche, is Porsche obligated to make a Porsche affordable for you? I don't think so, right? For insurance companies to do their job, it has to be done right. You have to insure the value. You have to do like a mock claim. How's this going to work out? And then you need customized coverage. So, I have a guy in California that wants to write around the California Fair Plan. So that's one of the strategies, is you let them buy
So if your home is more valuable than 2 million or 3 million,
then we would write an excess policy over the top of that, which again, as an insurance company, I'm concerned if you want me to write excess over you and your California Fair Plan or Citizens, which is bankrupt, what if you can't pay your portion of the claim? Right? You actually have to be able to write a check. And, it doesn't sound like California Fair Plan can, although they can, find the money somewhere. But
well, I mean, really, it's like we talked about it in the past about how it's like at a certain point, even if we insured a bunch of homes in Palisades, it's like Porsche. They only make so many of the 911 GT3 RS. It's like we can only insure so many large value homes and give them the best product possible, right? So, I mean, when is it that it's like...
Again, that's called underwriting, not sales. So when Farmers or Chubb or State Farm says, we're going to write policies in this area, it's a program, and they go in and they want to capture 12% of the market or 15, and they're just selling, right? And they think it's going to work or they wouldn't be doing it. But obviously, they don't get it right very often. If you're in an area that you're going to have claims, and the big claims make it worse because it's in front of us all. But the smaller claims, a tornado rips through some town in the middle of the country and ruins people's lives. Nobody gives a crap, right? They hate insurance too. So everybody hates insurance, but the solutions, it's not rocket science. It's really simple. It's a partnership. It's not selling somebody a policy. You stick with them after the claim if you did your job right, and you keep insuring them. Over time, it works out because in Florida, how many years between each storm? Nobody knows. But I know it isn't 120 years like actuaries use or like Florida homeowners use, right? And again, wildfire, it's different because the areas that burnt, I don't think they're going to be burning again anytime soon. But insurance companies still call those wildfire score 100. So, risk is like ever changing. And, people who rebuild, they'll build back better, and they should get a better rate than the old homes we offered. As an underwriter, as you write a home on a street and then the neighbor comes to you, that almost becomes one building to you as the insured, because you got two buildings next to each other that if they burn, so you buy reinsurance on each risk that you need. You don't buy a big program that's going to cover, you don't even know what you're going to write. You're just guessing on all this stuff. And, again, it's all locked down. It's all a can of corn. And then they put it on the shelves and they sell cans of corn. And it needs a customized partnership approach where you're not giving people. So two big problems. Most homeowners policies, if you have a $5 million house, they give you $2.5 million in contents. That's overstated, right? As an insurance consumer, I'm always like, I don't have that much contents. And if you have artwork worth hundreds of thousands of dollars, it's not covered anyway, right? That stuff you have to schedule separately and pay a premium for. But that'll become a target of litigation now, because if they underinsured their home and they're not getting paid, the lawyers are going to say, pay the limit. Why would you put that limit on the policy if they could never get it? And it was a sales tool, right? You would give them more contents than they needed, thinking, well, they can't ever make a claim for that anyway. They can't prove their claim. Well, in this case, it's burnt to the ground. All the records are burnt to the ground. So the lawyers are going to get rich off of this. So it isn't that there's not enough money being spent, right? Taxes, the money we pay lawyers as homeowners or people who sue their homeowners insurance company. And then, the lawyers suing the insurance companies, who's their favorite target. So if you do it right, you can bench the lawyers, right? You have to think like an athlete and be ahead of the ball instead of underwriting and thinking, well, we're never going to have this big claim. And the fact that all these companies are exiting California shows that they're running for the hills. They don't think they can make money there. And I know they can't, doing it wrong and at cheap pricing.
Some of the largest homeowners companies, non-renewed, stopped writing new business or left the state completely, citing business risk and rising replacement costs and the inability to adequately raise premiums. They are blaming regulators and warm climate for increased wildfires. Do you think that's a fair statement?
Well, again, everybody's entitled to their opinion. I think it's lack of managing the forest, the rate increase. As an admitted company, you have to get rates approved, right? But all these companies, or the majority of them, have an excess and surplus lines company where they could offer them coverage at a higher rate and they don't need regulatory approval. So, to me, I don't agree with any of those states. Those are, again, old school insurance excuses. And if you do it right, you don't have those problems.
That's all we got on points to make for today.
Well, I think, it's obviously sad that all these people have their lives turned upside down. Even with good insurance, a claim's going to be a nightmare. Your insurance and the way you buy it shouldn't make it a bigger nightmare that makes lawyers rich. So as insurers, I think we have the opportunity to do it right. If the worst does happen, what can happen does happen. You pay them, you do the right thing, right? And insurance companies, insureds, they're adversaries, right? That's one of the things that we got to get rid of. We have to be partners, stick with each other in the tough times, and it'll work out. If you move every year to a cheapest insurance company, you're part of the problem because you're not seeing value in, like you didn't see the value when there was no forest fire around. When the forest fire is approaching, then all of a sudden it's well worth it. So, again, it's insurance companies. I hope we all do what I'm doing because I think it's the right thing to do. When you have an accident, an auto accident, or any type of a claim, if you don't report it immediately, it's going to cost you more money. And if you have a flood or any type of a catastrophe at your house, you don't report it and take care of it immediately, it gets worse, like mold. All right. If you get on a flooded premises quick and you fix it quick, it's going to cost you more money than going and getting a bunch of cheap bids and picking the cheapest bid. But in the long run, you're going to save all the litigation and you're going to have a happy homeowner instead of an unhappy homeowner that sues you. So, we as insurers and buyers of insurance, we're feeding the legal system. Florida, just go back and look at the headlines. They all blame it on the litigation. Well, you can bench the lawyers by doing it right. And that's a buyer's decision to see value and not seek the cheapest. The cheapest often costs you more in the long run. All these people in California, it's not going to be cheaper for them now. And then, how many banks have force-placed insurance? When you have a loan and you don't buy insurance, they force-place it. So their insurance company, if they have a whole bunch of homeowners that didn't have insurance, can they pay their claims? That's never been experienced before, right? This is going to be, California is going to surpass Florida in litigation costs. So again, cheap isn't cheap in the long run. Let's do it right. Let's make better decisions. And if your insurance gets canceled or leaves you or non-renews you after an event, it's fake insurance. The true test is if you have a claim or an event, catastrophic event, earthquake, and it sticks with you and keeps insuring you after that, that's a good insurance plan. That's what I want, and that's what I have. So I have what I'm offering to everybody else because it's the right thing to do.
So if you're a homeowner nationwide and you want all-in-one coverage, true peace of mind, give us a call. RJ Lindsey, RJL at xinsurance.com or 801-304-5510. That's RJ's direct line.
Those are my digits. They're on the website.
Yeah,
I give
they're
them
all
to
over the
everybody
place.
for
It's-
40 years. Nobody wants to call me because it's too easy, common sense. But
yeah, we're
my
also
phone only rang once this whole time.
We're also on Chopper Chat. We've been doing some Chopper Chats, so we have talked about the wildfires a little bit on that. Maybe this is a rerun for some of you Chopper Chat watchers, but check us out on social media. Rick Lindsey 74 is his Instagram. Rick Lindsey 74. Mine's J Parker Lindsey. But call us, direct message us if you have any questions or want us to talk about anything specific. But we're going to SHOT Show this week, and we'll be doing a bunch of podcasts down there that we'll be releasing in the next few weeks. But we'll see you guys soon.